Hello guys. Welcome to another lesson. This is a video based on module 2, lesson 2, and it's basically the explaining what happens on a 4-hour chart. What I do on a 4-hour chart, which is mostly just marking out liquidity levels and making use of one of the most important tools in trading for me, the Fibonacci, and a template that sort of sets price into a premium and discount array, premium and discount areas. And then if you've gone over the text, you would have seen that we said a premium where prices are high in terms of commodity, most traders will be selling. And just most in any market, even in real life situations, when prices are higher, people do more of selling. And then when prices are discount, people do more of buying. So let me just jump right into this and show you what that's like. I would start with a top-down analysis. This is a Aussie dollar weekly chart. That's where I'll be starting. So right away, you've seen I've marked my levels of liquidity, areas of liquidity, weekly fair value gap right there, weekly auto block, main threshold respected by price. So we're heading up. We headed up. We swept this buy side right there. Price reached up into this weekly fair value gap. Mind you, on lower time frames, you would have seen a reaction from the sweep of this buy side right there. But on the weekly, it looks like it's just one candle that traded right into this weekly fair value gap, which price right now is respecting because it didn't close above that with a body. So yeah, right now we see price heading down as a result of a reaction of this weekly fair value gap. So that's it for price on the weekly time frame. We're going down. So let's come down to the daily chart right there. We see why price even traded with a wick above that weekly fair value gap. Why? Because it needed to grab liquidity off of this daily fair value gap right there. And it swept its highs. Right now, what is it doing? It's heading back down into a daily fair value gap right there. So why, but this is a fair value gap right here. Why haven't I marked that out? Why haven't I marked this out? If you did, you would have seen that price traded right into there. And then you must have reacted off the 4-hour, a 4-hour institutional area. Could be a fair value gap, a high. And then we do have narrative from a higher time frame why price should be going down. But I will give you a reason why I haven't even marked this out, though it is a level of liquidity that I think price would cover up. And then we get a reaction off of this fair value gap, or you can see 2 candle auto block right there. Sweep of a low, fair value gap. This is an auto block. So let me just drop right down into why we're here, the 4-hour chart. And when you come into your 4-hour chart, right away, what you want to find is the most immediate lag. We see everything is labeled. This is why it's good to label your chart. I use the warmer colors for the weekly time frame, the blue for the daily, and then I use a gray for the 4-hour time frame and everything below that. We want to look for the most recent lag, or in this case, a push. For bull runs, I say push. For bearish runs, I say lag. In this case, a push. And when you're measuring out sort of PD arrays, or in another case, projections, I would say I'll sort of teach you what these means in later lessons. You want to be using the wicks. I will also go over a situation where you'd be using the body instead of a wick, but in this situation right here, you want to be using the candle wicks to get the whole of that price push. Most immediate price push. Immediately you hop down to your 4-hour chart. The most immediate price push right there. So what is this? This is a premium area. That's premium area. This is a, you can do all this on your chart. Don't be afraid to mark your chart. Mark up your chart, like right on it. So when we are premium, what do we do? As it said in the text, you want to sell. And that's just awesome because it goes with all our, on the weekly, we established that price is going down. On the daily, we did establish that price is going down. And on the 4-hour, we've gotten even more reason why price should be selling. So that is just great. That just so adds to our confluence to why we'd be looking for sales on the lower time frames. Right now, we can see that there's basically no movement, and this is a live market. We are on the 12th of March 2024, Tuesday. This is a live market. We should be expecting sales. The premium to discount array is such a powerful weapon in determining your bias, your higher time frame bias. It's a powerful weapon. So this is just a good example how you can do a top-down analysis and what you'll be looking for on the 4-hour time frame. Let me just build on that a little bit more. So price reacted off of this fair value gap right here. Where is the next draw of liquidity? Where is it? It has just grabbed this. Let's see. Well, it hasn't. The high of this candle is 209. The high of this candle is 214. So yes, it has grabbed that. Let's grab that. This is 214. This is 209. So we grabbed that right there. Swept that. Well, what that means is that it has gone above this swing high right there. You can see price just traded right above it. So the next level of liquidity, this is not a closed candle yet, so we can call this a low, a sell side low. This is the next sell side low. If it does come that, there is a good chance that price would be trading right into this fair value gap right there. And that would be right in this way, I would say, for there. Yeah, I see. I see. Sell side. That's how we sort of just mark up your chart. So if I leave the chart this way, I come back any other day or anytime, probably not too far away from now, but if I came back the next day, I know where everything is. I know what I'm looking for. I know what price is doing because I mark up my chart. So this is basically what I would be doing on the 4-hour time frame, just determining liquidity levels, areas that price could trade into. I already have a bias. I already have sell as my bias. So it's just, reactions off of that. I want to see a sweep of this new high, before price could sell. Also, I wanted to add that, well, here we have the euro dollar daily chart, right? And then if you look at this dealing range right here, if you look at this dealing range, you see a daily fair value gap right here. So that's the direction that price is moving in, right? And then if you measure out that daily range, let's grab a Fibonacci. Let's measure from here to here. Going to grab the 50% template right there. So that's we have a equilibrium right there. So why keeping in mind that price is looking to rebalance this inefficiency, let's drop down to our 4-hour chart. So we have equilibrium right there. I also wanted to mention that you should look out for the way that price moves, in a sense that in its quest to balance this imbalance in all these areas,
is doing a push and a pullback, a push and a pullback, a push and a pullback motion, which is the conventional way that price moves. It's trending up right now in order to rebalance this. So you have to sort of go with the trend in the sense that when price does this and you have a push, there's a pullback, and you have another push, there'll be a pullback, and you have another push, there'll be a pullback. So that's essentially how price sort of trends. And then when you grab your Fibonacci and you measure out a push in the direction that price is moving in order to, well, we've established that its aim right now is to rebalance this area of inefficiency. But in its trend, in its movement to do that, you have to keep in mind that these dealing ranges, this movement, this ones you can see here, a push, it traded back down into a discount area. There is also a premium and discount area in this dealing ranges. So you have to keep that in mind, right? And price always has to trade down into a discount area before it can push again, right? So what I'm trying to say is why we have this dealing range that we're conscious about, and we see that as an area that's pulling price. If you go back to the daily chart, see that as an area that's pulling price, and price is looking to rebalance this. Then we come to our 4-hour where we are really conscious of the premium to discount dealing ranges. I'm trying to point out that there are multiple that you have to look out for on a daily basis. It will take a while for price to get up here and ultimately rebalance that imbalance, this inefficiency right here. But while it's doing that, you have to look out for several dealing ranges that it creates along the way. So when it has a push like this, you measure from here, this low to this high, and expect price to trade down into a discount area of that dealing range, right? So I do hope that you understand what I'm saying. So when price is here, at this point, it's traded into right here, fair value gap. I'm looking for this to trigger price to trade back down into a discount of this dealing range. So it sort of helps me navigate when price is really shifty on the 4-hour time frame, when price is really moving around, sort of helps me navigate where I am and what kind of setup I should be looking for in my respective kill zones. All right. So I just wanted to add that to this video, and I'll see you in the next one.